Welcome back, everybody. Today we're talking about how much car insurance do I need? So what steps do we need to take to determine our needs? First, you need to find out what your state minimum coverage requirements are. Amazingly, every state has different requirements and minimum coverage amounts. And if you have a lease or a loan, in other words, somebody else bought your car, like the bank or the car dealer, then you need to check your lender's requirements. And you want to make sure you have enough coverage needed to fully cover the costs in case you owe more on your car than it's worth after that accident. You need to determine the value of your assets. This may include your car, savings, home, business, retirement, and investment accounts. And why do these assets matter? Well, if you're involved in an accident and are underinsured, meaning that damages that you are responsible for exceed your insurance coverage, a court may order you to make up the difference, i.e. pay it out of pocket. The cost of additional insurance coverage can be minimal compared to the financial impact of an expensive accident. So what factors affect the car insurance rates? Well, we've got 9 factors that we're going to address individually. Let's get into it. Hey, are you finding this video helpful? Smash the thumbs up. Give me a like. Yeah, all right, let's move on. What's your driving record? If you've received a speeding ticket, been in an accident in the past 3 to 5 years, insurers view that as an indication of risky driving behavior and will typically raise your car insurance rates because of it. On the other hand, drivers with an accident-free record may receive a discount on their policy because they pose a lower risk. FYI, don't lie on your application because there's a big database in the sky and insurance companies know everything about you, everything about your car. You take your car in because you got a little fender bender and you take it into a body shop. Guess what? That body shop puts that fender repair into the system and the insurance companies know it. So be careful and be honest. All right, how much annual mileage are you driving? The likelihood of getting in a car accident goes up the more you drive. That's why high mileage drivers often pay more for car insurance than low mileage drivers. So if there's been a recent change to your driving habits, you should contact your agent to update your mileage estimates. It could save you money. It could also save you from not getting covered because you've quote unquote lied on your application. Let's say you apply and you're only driving 12,000 miles a year, and then after you get your insurance, you get a new job, and now all of a sudden you're driving 36,000 miles a year. That's 3 times as many miles. You better tell your insurance company, or they may not cover you on a claim. Just saying. What kind of vehicle make and model? Generally speaking, non-luxury cars and SUVs are cheaper to insure than luxury vehicles because the cost to repair or replace these vehicles is lower. That said, auto insurance companies also look at a vehicle's theft rate, safety features, and how a type of vehicle is typically driven. Yes, there are certain cars that thieves like to steal, and the insurance companies know it, so they charge you more for your insurance. What about your credit score? People with good credit aren't necessarily better drivers, but insurers view them as more financially responsible. And that responsibility is rewarded with better auto insurance rates. On average, drivers with good credit pay about 22% less than those with fair credit, according to our analysis. Many insurers also use good credit scores to calculate insurance scores to predict the likelihood that a policyholder will file a claim. It's like if you're not creditworthy, they think you're a deadbeat and going to rip them off. How sad is that? So you want to boost your credit score, go get yourself a guaranteed credit card, put $1,000 or $500 or however much you can afford to put on it, then go make a purchase, then pay it off, make a purchase, pay it off, make a purchase, pay it off, build up some kind of credit history and your scores will go up. So location, where do you live? The risks are associated where you live can impact your car's costs, the car insurance costs. For example, drivers in large, high-traffic cities like New York City and San Francisco and Los Angeles and Atlanta and Chicago, they tend to pay more in premiums than those that are out in the rural areas, that fly over America. Because, let's face it, more cars on the road means more accidents, more vandalism, and higher theft rates. Sad but true. What about the driver's age? Young drivers, especially teenagers, tend to have less experience behind the wheel than other drivers. And not only do they have less experience, but they have the attitude that they can do no wrong and that they're unhurtable. So insurers relate inexperience to higher risk. Even if you are an experienced driver, your rates will likely go up if you add a younger driver to your policy. On average, 35-year-old drivers can pay 20 to 25% less than 25-year-old drivers, according to our analysis of car insurance rates. And in fact, if your current insurance is going to go up significantly by adding a teen driver, consider getting a separate insurance policy for that teen driver and their car. It may actually be cheaper to cover the teen on their own policy, and you keep your policy with your great driving record and all of your discounts. What about vehicle ownership? If you're financing your vehicle, your lender will likely require you to carry collision and comprehensive coverage until the loan has been paid off. If you lease your vehicle, SIMRIDGE coverage is going to apply. So if you own your car, it's different than if the bank owns your car. What's your marital status? In general, premiums are typically lower for married drivers than the single counterparts. And by combining your auto insurance policies for you and your spouse may give you eligibility for a multi-car discount. But if either of you or your partner has a less than stellar driving record, you may not see any savings from sharing a policy. But be careful, because every state's different. And it's important to note that some states and insurers require spouses who live together to share a policy, or at least disclose on each other's policies that certain criteria are met. Have you installed any safety features in your car? You may qualify for savings on your insurance if your car has driver-assisted features that can reduce the chance of an accident, such as collision avoidance or anti-theft. Right? You got an alarm? Wow, that lowers your rate. You got things that beep when you cross the line? That's great. That lowers your rate. So have any of these things affected you? Let us know in the comments. How have you lowered your car insurance rates? And if you want to know more about insurance, please consider subscribing to this channel. You can also go to our website at www.insurancefaq.me and get quotes from a variety of vendors so that you can find the truly cheapest car insurance for you. Thanks and have a great day.